Scale fast, raise massive VC funding, hire 100 people, become the next unicorn. Let's be honest, that is the relentless, exhausting noise we hear every single day in the modern business world. We've somehow completely accepted that rapid, endless growth is the single, unquestionable metric of success. But I want you to take a step back for a second and really ask yourself, is this actually the only way? Welcome to our explainer. Today, we're diving deep into Paul Jarvis's totally revolutionary framework from his book, Company of One. And we're going to shatter some massive corporate illusions right out of the gate.
80%. That is the staggering percentage of startups that ultimately fail. And here is the wild plot twist. They don't usually fail because they couldn't grow. They fail because of premature scaling and entirely unnecessary complexity. Literally, they collapse under the sheer weight of their own bloated ambitions. Which leads us to a fundamental, honestly pretty provocative question. Is endless growth actually a trap? In this explainer, we are going to completely dismantle the myth of perpetual corporate scaling. We're going to explore a radically different mindset that champions becoming better, more efficient, and highly profitable over simply getting bigger and bigger. Think of this as your masterclass in building a business that actually serves your life.
Act 1. What is a company of one?
Now, a company of one isn't just about being a solo freelancer. It's a massive shift in how you fundamentally operate. Look at a traditional startup. You chase more revenue, which means you inevitably hire more employees, which leads to massive new expenses and ultimately far less personal freedom. A company of one totally flips the script. You aim for better profit, you keep a small, tight-knit team, you heavily leverage automation, and you achieve maximum freedom. Whether you are a solo consultant, a tiny micro agency of 2 or 3 people, or even an autonomous employee within a huge organization, this mindset is all about fiercely preserving your autonomy.
So how exactly do we build this? Jarvis outlines 4 foundational pillars for a genuinely bulletproof business. First up is resilience, what we like to call tike reheneki capacity, or the sheer capacity to endure. When economic downturns hit, massive companies crash because their overhead costs, giant office rents and bloated payrolls, are just too heavy. A company of one keeps overhead ridiculously low, making it practically indestructible. Pillar 2 is autonomy, having ultimate control over when, where, and with whom you work. Third is speed and agility. While a 500-person company takes 6 months of endless board meetings just to adapt to a new AI tool, you can pivot overnight. And finally, simplicity. It's about rejecting complex management hierarchies to focus strictly on simple, core execution.
Act 2, the traditional growth trap. So why does everyone desperately want to be a massive corporation? Mostly because of a really dangerous illusion. Founders often just assume that if they are profitable making $100,000, scaling up to $1 million is magically going to mean 10 times the profit. But that's a total myth. Because while your revenue grows by 10x, your cost and overhead often balloon by 12x. At the end of the day, your net profit actually drops, while your stress levels absolutely go through the roof. Let's break down the truly painful pitfalls of this hyper-scaling obsession. First off, increased overhead. More employees equals bloated HR policies, wildly expensive software, and endless layers of middle management. Second, there's this tragic loss of direct contact. The founder, who probably started the business because they were brilliant at building the product or actually helping customers, now spends their entire day stuck in administrative meetings and managing team conflict. And finally, the VC trap. If you take on heavy venture capital or debt, well, the business simply isn't yours anymore. Investors will force you to grow at 300% per year, practically driving the company to either crash or burn out trying.
Act 3. Defining your true enough. Okay, this right here is the philosophical core that can completely rewire how you view success. In a traditional business, you only have a lower limit, like the absolute bare minimum to survive, but absolutely no ceiling. They endlessly chase more clients, more revenue, more hours worked. A company of one introduces something totally revolutionary, an upper limit. You define exactly what you need for a comfortable life, true financial security, and creative satisfaction. Maybe that's $5,000 a month, maybe it's $20,000. But once you hit that number, you stop trying to grow in sheer size, and you instead start enriching your business's efficiency and your own personal freedom. Traditional growth fixes problems by just adding more hiring, throwing more hours at the wall, aggressively adding more features. But when you operate as a company of one and you finally hit your enough, you fix problems by making things better. Better pricing structures, better automation, taking on better, higher quality clients. You don't just throw warm bodies at an issue, you engineer a smarter, much leaner solution.
Act 4, the power of simplicity and automation. So how exactly do you scale your output and your profits without scaling your headcount? Well, every single time you feel overwhelmed and think about hiring someone new, I want you to stop and ask yourself this exact question: can software, AI, or a simple checklist automate this? Before you ever take on the heavy, long-term obligation of payroll, look closely at your digital tools. Can you deploy customer support chatbots or incredibly detailed FAQs? Can you set up automated booking and onboarding sequences? What about shifting from live, time-draining meetings to quick, asynchronous communication like Loom videos or Slack? Technology is literally your ultimate leverage here. Now, if you are a freelancer or an agency owner, the absolute golden operational tactic is productizing your service. First, you have to stop creating custom quotes for every single client. It's incredibly draining and eats up all your time. Second, standardize your workflows. And third, start selling fixed scope packages. Instead of selling your hours, you sell a guaranteed outcome. For example, I will deliver a 5-page website for $3,000 in exactly 7 days. Standardized inputs, highly predictable outputs, and a fixed price. It scales beautifully without ever needing a massive team.
Act 5. Building unshakable customer loyalty.
Keeping your operational footprint tiny actually gives you a massive, almost unfair advantage in the market. The math here is undeniable. Let's compare the traditional acquisition mindset, where you're constantly chasing 1,000 cold leads, burning a ton of cash on ads, and dealing with a toxic turn and burn cycle, with the retention mindset. Serving just 50 loyal clients incredibly deeply results in high lifetime value and massive organic word of mouth. Here is your financial superpower. Acquiring a new customer costs anywhere from 5 to 25 times more than just keeping an existing one happy. Retention is where the real sustainable profit lives.
So you effectively use your customer service as a moat against the big guys. While large, faceless corporations are sending out automated, robotic, do-not-reply emails, a company of one can actually send a personalized 30-second video or a highly thoughtful email. Because your team is small and incredibly focused, you can over-deliver with an unmatched attention to detail. Those deeply satisfied clients, they stay for years, they gladly pay your higher rates, and they bring in continuous, highly qualified referral business, which completely eliminates your need for a massive marketing budget. As we distill all of this down, the ultimate takeaway for independent creators and small business owners is simply this: ruthlessly focus on net profit margin and your own personal time freedom, not hollow vanity metrics. Stop trying to impress random people on the internet with your massive team size, your gross revenue turnover, or a fancy, expensive office space. When you hit your target, reinvest that success right back into your own leisure, upgrading your skills and crafting an even better client experience rather than just blind headcount growth. Which leaves us with one final, deeply provocative question for you to reflect on right now. What is your enough? Seriously, define your upper limit. Because once you honestly answer that, you might just find that building a company of one is the exact key to the life you've been working so incredibly hard to achieve.